want to be successful, you have long-term commitment, you need stable systems, and an excellent service.
Hello and welcome to this masterclass discussion on the changing nature of correspondent banking, brought to you by the Banker magazine from Deutsche Bank's offices in Frankfurt. My name is Michael Imeson and I'm a contributing editor of the Banker magazine. I'm joined here today by Werner Steinmueller, who is head of global transaction banking at Deutsche Bank, and also Markus Sehr, his colleague, who is head of institutional cash. Now, we've been talking about standardisation, industry standardisation in correspondent banking. We're now going to talk about competition and consolidation. So, Werner, where is most of the competition coming from at the moment for not only global transaction banks like yourselves, but also the regional banks?
One thing is Basel III have the change in focus of the banks. Where a lot of banks focus on investment banking, I see a reorientation to commercial banking. And commercial banking is transaction banking. I think this is very clear. When I also look to the three areas, Asia is a fast-growing market. So in fast-growing market, it's easier to position banks on a regional, on a global basis. So for Asia, it is a focus of the global banks, as well as some of the regional banks, to go for market share. As the market is growing, it is a good playing field. US, dominated by global US banks. Some of them are very local, and US market is so huge from the demand. So even some of the local banks have a good living in the home market. Some of them are really global. Coming to Europe. Europe is fighting for market share in a very slow-growing market. What means a slow-growing market going for market share? A lot of competition is happening. Competition, I see, for global banks are in all three markets, like Deutsche. But we also see some regional banks. And for regional banks with a dedicated focus, for example, in the Nordics, where some very good banks offering banking services, including correspondent banking in these areas where we are not all of the Eurozone, Central and Eastern Europe, middle of Europe. So we have some really specialized banks. And if we are very good in a certain area, we can have a good living in this world. I think all of the growing and the globals are more and more of a consolidator. And the consolidation has to be who is paying for it. And this is overall in Europe, specifically for the local banks. If you are very strong on the local payments with a SEPA, you make less money. So it is more and more difficult also to make the money to invest. But I see a good living for the global banks with growth area, Americas and Asia. Regional banks in all three areas, which a good business proposition can exist. But the single country banks in payment services have it very difficult to find a very unique business proposition outside of a local payments. So I see really the development for regional and specifically for global banks will benefit from this development on behalf of the local banks.
Mm-hmm. Regional banks building up international networks. Markus, how easy or difficult is it for them to do that?
It's definitely not easy. If you want to build a global network, this means you have to heavily invest. And you start with very low scale. And low scale, high cost, that's not going to work in transaction banking. So what I see is that local and regional banks are trying to partner with global banks in order to have them doing the heavy lifting when it comes to investing into a global network and retaining and maintaining that global network. With that, the local and the regional banks then can really focus on their core business and can focus on providing core value to their underlying customer base and rely on a global partner to do that heavy lifting. Heavy lifting when it comes to investments, but also heavy lifting when it comes to know-how and retaining that know-how and being there as a reliable partner to the local and to the regional banks.
Mm-hmm. What about non-banking organizations, the likes of PayPal, Google? They've entered the retail banking market. Is there a possibility that organisations like that, the non-bank organisations, could enter the wholesale banking market, correspondent banking, transaction banking, and take business away from the incumbents, the global transaction banks like yours?
Clearly, that's an area where we have to look at, and there's a lot of talk about the so-called fintechs. They come with a cool brand image, and they are very attractive for Generation Y and younger. And if you look at what they are offering right now, you mentioned it, the retail segment. They are looking at that retail segment, but they're also very much looking at the domestic segment. And I'll give you an example. If you want to order something in the United States via the internet, you have online shops, but at the end of the day, you might be forced with a situation where you have to pay this by check because you don't have the payment infrastructure. And ordering something on the internet and paying with check doesn't go along very well. So this is something where these companies have found an area. But I don't see them so strong in the wholesale segment. Nevertheless, we are looking at the scene, we are watching it, and there are clearly areas where we could also learn from the fintechs, but also areas where we can partner. And we must not forget what we discussed in the first chapter. In payments, it's very much about looking at KYC, AML. And this is an area where we have a long history, where we have a lot of know-how, where we don't need to be shy to bring in our know-how. And clearly we have the investment, we have the commitment to invest there, but we also have the commitment sometimes to say no to a certain client segment to get it onboarded. And with that, we are watching the segment, and I'm pretty sure that this will have some changes for the industry, but I see ourselves very, very well positioned for that.
Mm-hmm. Well, let's move on to consolidation. Consolidation of services, not so much organisations, consolidation of services. There aren't as many providers of cross-border banking services as there used to be due to regulation, compliance, risks and competition. So what sort of opportunities does this industry consolidation of services present for those that remain providing those services? Does fewer banks with fewer relationships handling greater volumes improve efficiency? And does it enable both parties in a correspondent banking relationship to work more deeply and collaboratively to understand the third party, the end customer?
What we have seen in all of these regulatory changes, and I think also to the past, we expect that much more M&A transactions are happening, more on the bank-wide. This is not happening. What I see now fostering by the stress tests done in the EU, speaking about Europe in specific, I see much more partnership with services. So banks are giving up certain services and bringing it to others, for example, dollar clearing and others too. I think very important here is to want to be successful, you have long-term commitment, you need stable systems and an excellent service. I think this is a combination you need in the service area to position. There is a consolidation happening, also fostered by regulation, and it's much more difficult to invest in a wide range of products. So this is the consolidation. We in Deutsche selected transaction banking and also here in correspondent banking as our key investments. And this is also seen in our decision 3 years ago. We made transaction banking one of the 4 divisions in Deutsche Bank, which reports straight to the CEO of a bank and fostering these requirements. So it's pretty clear we are absolutely committed in this business field. And I think this is the way forward to be successful in the service industry.
Well, Werner, thank you very much. Marcus, thank you too. That's all we have time for. Thank you.